Hello and welcome to the S2P Market Commentary for the market week ending February 22nd, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell from 2.53 to 2.01, still in strongly bullish territory. The total count of securities in bullish or bearish patterns decreased 1% to 2,376. The count of bearish stocks increased 14%, while the count of stocks in bullish patterns decreased 8%. The S2P P&F Market Breadth Summary Chart shows us a market now 9 consecutive weeks in bullish territory. Paid subscribers have access to the data from which the chart is generated. You may become a paid subscriber by visiting S2PMarketSignal.com, clicking on Membership, and clicking on Sign Up. A free 2-week trial membership is also available for those who wish to become acquainted with the service. The well-known market breadth indicator, the NASDAQ McClellan Summation Index, fell 42 points for the 10th drop in 22 weeks. At a positive 519.58 points, it remains above the November 2010 top, the January 2011 top, the November 2011 top, the September 2012 top, November 2011 top, the July 2012 top, the June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom, but remains below the February 2000 top. Volume analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 3 accumulation days and 3 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended the week in neither accumulation nor distribution mode. Momentum. The CCI 20 daily began a Woody's uptrend 12 weeks ago. It now has 2 days below zero, but is outside the plus or minus 50 range for a valid zero-line reject signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the NASDAQ Composite Index began a Woody's uptrend 2 weeks ago, while the daily CCI 20 began a Woody's uptrend 12 weeks ago. The CCI 20 weekly now has 8 weeks above zero and began a Woody's uptrend 2 weeks ago. At 100.45, it is outside the plus or minus 50 range for a valid zero-line reject signal. Industry rotation the last 2 weeks. All of the top 5 industries are fractionally positive, and all of the bottom 5 industries are negative. Bullish, brokers continues in the top 5. REITs has entered the top 5. Gold and silver remains in and now leads the bottom 5. Bearish, networkers remains in the bottom 5. Semis and disk drives have left the top 5. Disk drives and networkers have entered the bottom 5. Oil has left the bottom 5. Focus this week. The Fed has succeeded in blowing another bubble, which will lead to another crash. submitted by Phoenix Capital Research on February 24, 2013. Quote, as we noted earlier this year, the Fed, while attempting to appear committed to endless money printing via its QE3 and QE4 programs, was in fact decidedly split on whether to commit to more as well as the risks inherent to additional QE. Indeed, the Fed FOMC minutes indicate that some Fed members were concerned about whether QE even worked as a monetary policy. End quote. Interesting reading. Hope you enjoy that and become somewhat wiser for having looked at it. Thank you for joining us for this week's market commentary, which is submitted by Donald Pearl Jr. Have a great week and happy trading!